But you're going to end up writing 2 policies on most families that you sit down with. Okay? Oh, I couldn't say. Guy, you're right. He's right when he said the war is on. You understand, being the fastest growing industry in the world, the biggest industry in the world, the industry that has the most shortage of people to help people in the world, okay? And we're over here getting geared up and trained up. The war is on. Maybe the next school I'll get a t-shirt, the war is on. We got to remember, the war is on. And the war is on is going to be the people that equip themselves the most is going to win the battle. Okay? You got to win the battle before you win the war. So you got to make sure that you're learning and taking all these things that we're taking, because the person that goes out and get the most field training is probably going to survive the mission. Because if you get no field training and we send you in the field with a machine gun, you're not coming back. Even though you got a gun. Right? So we want to make sure that you're fully armed, fully trained, and observing this type of stuff. I'm going to bring Chris Persad up now. I think one of the biggest pieces of the puzzle that we have is the disability side when we sit down with families. Because some of us, we run in the house, we're doing FNA, you get a check from the family real quick, everything is good, and you're out the door. It's like, we are impressed that you got a check, but you don't even know the business on the table. So I want people to make sure when you go in there, we're going to show you on that FNA all the pieces, all the avenues that you'll be able to pick up an income stream from sitting at that table. And I think one of the next pieces is the disability side of this business. And I can't think of nobody better, actually, to come up here and share that with us. Chris Persad. You need internet?
No, I don't. I don't have a PowerPoint and I don't need internet, but thanks. Rocky just said it, that those who are equipped, you're going to win the war. First, I want to say congratulations to all of you who are here today. You've taken that step in the right direction to educate yourself. And that's the start in any business. I mean, from the beginning, we've grown up, our parents said, get a good education, and that's the foundation of your future. And this, you've chosen this career, and education is the part of education is the part of learning, where you can advise your client about their needs and wants. So once again, congratulations to you all. You come here with your skull full of mush, and you would leave thinking like a lawyer.
Yeah. Yeah.
Anybody know that quote?
Yeah.
That was, who saw it? Huh? Professor Kingsfield from the Paper Chase. It was a law professor who was teaching first-year students in college law. And what a great, profound statement that he's made. That you come here, clear out what's in your head, we're going to teach you the right way. That's what this academy is all about. Dan, I'd like to congratulate Dan on a wonderful presentation. And I've been in the business for over 20 years. And they've always said that there are many leaders or many presidents of the companies that are disconnected from the field because they've never been in the field. When I joined this company, or when I joined with Kelly, I did. He said check the management, and the first management I checked was Dan. And I stopped right there. Because Dan has all the credentials for an insurance business. CHFC, CLU, and it was something that I started myself that I was going to do. So Dan, well done, guys. We have a great leader that knows what you're doing, what your job entails, what you're looking for, so the connection is there. So that's great leadership that we can have. Thank you. My name is Chris Persad, you guys heard. 22 years with MetLife. I left and then I went independent. And independent gave me a choice. And the reason I went independent, I must say, I went skiing and I fell down. And I was on temporary disability for about 6 months. And this is a good this is a good way of talking to people, one like yourself who's been in the business for many, many years. Because you can be making $200,000 a year in the insurance business as a captive agent and go on disability and see what your income is. With QS2, your income will continue. Try that. So I went independent and gave me the ability to work with many different companies. And I started with life insurance. From the second year, I went to PNC. And I've attended every academy there is every year. That's how you get good. So, you know, that's what you sharpen your tools. Whether you're a tradesman, you sharpen your tools as you go along. So you're in a position. The tax laws, they changes when the politicians change the tax laws. It gives you an opportunity, if you know what the changes are, to help your clients. Estate planning, for example. You know, every time the laws change, the estate plan, it's an opportunity to sell a different product because the insurance company works in conjunction with what the laws are to make it fit for you. We are here as a career to make money. Bottom line, we came here to make money. However, to make the money, we have to sell a product or sell our services, and we have to meet clients. Many people don't understand yet, and Fuji mentioned it, I think Dewey did, the impact of this business that we are in. We change lives, and nobody will realize that until you deliver a death claim check. That's when you realize the impact of the business that you're in and how important you are. Dan talked just now about the 1.8 million need by that client. You go sell $500,000 and that person, index UL or whatever, just to get out of the house, and that person died, you did a disservice. However, if you sell the 1.8 million, it can change the life of that family and the next family to come. So our job is very, very important. We take it not too serious, but again, it's when that death claim is delivered, that first death claim, and I delivered that claim. We talk about compliance, and just be careful that when you write the policy, you don't run out the house without asking for a check. I didn't mention that one in compliance. Because if you don't ask for a check, that person has no insurance, temporary insurance. And if that person dies, they can always say, you never asked me for a check, or he didn't ask us for a check. We didn't know, we would have given him a check. He didn't ask us. So it's important you ask for a check. And that's how the person will have temporary insurance. Yes?
Chris, I have a question. Because Rocky said to get a void check.
Yes.
No, with the void check, is in compliance because they didn't make any payment. Does that equate to a payment?
I'll be honest with you. I've never asked for a void check, and I don't know if a void check gives you immediate coverage, Rocky. I've always asked for a check.
The way it works is,
You tell me.
which we have always done, if you get a void check and you wrote on the temporary insurance to this date, to be drafted, the minute you walk out of that house, and that insurance company received that policy, they don't need a check, they actually draft that money.
So it's good.
Yeah.
So that's answer your question. That's right.
Yeah, but my question there, that would happen until they actually receive the application.
No, for the date, whatever the date is on that application. When you walk out of somebody's house, if you get a void check and get their banking information, pull the form out, and they sign on that paperwork, to take this money on this date, on the 5th or the 25th, and you walk out of the house, that person is insured.
Okay.
So the draft check is as good as a check, written check. Just make sure you ask for a check, because when you ask for a check, when you actually get a check, the clients feel that they have purchased something. So you have taken the sale for them. They feel they have bought insurance. If you don't, commitment, Alex. If you don't ask for a check, in their mind, they haven't bought anything, and you'll change your mind, most likely, and they're still shopping. So get that check and stress the importance of insurance. Because I've taken back one death claim before the policy came back.
Wow.
One. And that was important to the family. They bought a house, it's still about 15 years ago, and I did the insurance to cover the mortgage. and wrote the application, collect the check. Before I came back with a policy, the man was dead. But I was able to bring back it was $120,000 life insurance. Then from the time of death, the company adds interest to that money from death until you deliver it. Makes a big difference to that family, the mortgage is paid off. Okay. Another instance which is important, I didn't write the policy, but an associate in my office did. Collect the check and left the house, and the client was walking his dog that night and was shot.
Same night. Wow.
Right? So the check is important. This check is important. I'm going to talk about disability, but before I delve into disability, Dan was talking again. Dan did a great job. It is not money that buys insurance. We talk about education. We talk about it's love. Love buys insurance. Your love for your family, bucket of love, as I mentioned. Money pays for it. So when you're selling or when you're educating your client, you're putting together what their debts and what they have. Or the F&A is to find out where the client's problem is. We're here to solve problems. And if you find no problem in the F&A, you can't sell it. So the F&A is to take the facts of the client, what they want for their family, and where their shortfall, what the family is, the shortfall is, what they would like for their family. I would like A, B, C, and D, and you need 1.8 million. And somebody said they can't afford it. Which one of these would you not want for your family? You don't want the kids to go to college? Oh, no, I want the kids to go to college. So it's love. Disability. We insure our cars, we insure our homes, we insure our boats. Yet we don't insure the most important thing there is. The ability to pay for all those. For example, if you had Alex, you're at work and every time your wife or kids call, Dad, I need some money. You say, go in the closet and turn the handle on the machine, $100 bills will come out. All right? Would you take care of that machine? You make sure it's working? Okay, we are that machine, you are that machine. Because if you break down, where's that money going to come from? Okay, life insurance will pay off for everything there, but, and again, we term disability as living dead. You're alive, but your income is dead. And it probably costs you more being on disability to live. So disability insurance is something you must talk about. The F&A, I'm going to refer back to Dan. He says the F&A, and we're here not to go into too much debt in all the products. We're here to touch on every product, so you are capable and you're educated enough to talk about it with your clients, to bring out awareness. It's okay if you don't have the answer. Always tell them, oh, I'll find out about it and get back to you. But at least you can address the topic. Michelle and I went to an appointment last week. The guy has insurance. He thought his insurance will pay for his mortgage. The point is he never even thought about disability. He's making $90,000 and has no disability income. Now all of a sudden that's number one on his list. Same thing with Alex. We went to an appointment. Not a lot of agents talk about disability income. So there's a lot of business out there. And the importance of it, you have to qualify for it. Okay? A W-2 employee, your disability is based on what your W-2 you make on your W-2. When you talk to a business owner who is 1099, okay, if he says I make $180,000, but at the bottom line he paid taxes on $23,000, disability will be based on the $23,000. Right? So we have to understand the difference between how the person is being paid.
So you're saying if your W-2 is based on the gross before taxes versus self-employed is based on the net.
The net.
It's unfair.
It's unfair, but
Won't become self-employed.
We are all.
That's why some
self-employed.
people self-employed.
That's right.
Well, when you're self-employed, you also have many
You
options.
save the tax.
You can take out disability to cover your business operation expense, called overhead expense.
Oh, I
So
see.
you can take out that part.
So that's that, that part.
But let me stay back to the FNA and to the disability that would apply to when you go into someone's home and talk. You talk about the life insurance. We want to find out if that person doesn't, if his income is dead, now what's the income that will be coming into the house to pay the bills? And the statistics have shown 52% of foreclosure is the cost from disability, where an income, someone in the household, the income dies. So we can save a lot of foreclosure by protecting income from disability. Disability, the ratio for disability also decreases as you get older. I have some statistics here. It's about 2 years old, but I still think it applies. It says 1 in every 2 mortgages foreclosure is due to disability. There's an injury caused by a motor vehicle crash every 14 seconds. Disability is more likely than death during your working years. We're missing a lot of the opportunity. We're not doing proper service if we don't address it. But again, that's what the academy is here for, to educate you about it, to address disability. How would such a disability affect your ability to earn a living? If you're like most people, your earning power could come to a halt, but your bills and living expenses will continue. Okay. Disability will provide an income for that person, so it's easier to talk about disability. I just want to touch on the statistics so you can see. A 25-year-old has 37% chance of disability. And that statistic goes down. A 45-year-old has 28% chance of disability. And a 55-year-old has 20% chance of disability. I'm going to just go to an example of a disability plan, how it worked. And it's an actual one. Michelle and I went to this appointment last week. It was for the same person that was making $90,000 a year. Disability is based on your occupation. Obviously, someone working in an office is less likely to become disabled than someone working in a factory or driving a truck. So it's based, first of all, on your occupation. Okay. Disability is not there to replace your income, 100% of your income. Otherwise, many of us will not go back to work. So if you're making $80,000, the insurance company is not going to say if you're disabled, you will get $80,000. Sometimes they go up at 60, 70%. It's also based on your profession. But let me stick with this one here, this one example. 90,000, he's an elevator inspector, not an elevator mechanic. Also, when you describe the occupation of your insured, you must be specific. It could have easily been construed with his occupation. He does not fix the elevator. The mechanic is at more risk than a person who goes, look at the elevator, make sure it's okay, and write a report. He was classified as a 3A. He was eligible for $3,000 a month. Okay, so he can get $3,000 a month if he becomes disabled. Now here's the question, Yuri. If you become disabled, the plans that are available to you, do you want it to receive benefits for 2 years, for 5 years, or for 10 years? The client has a choice as to how long they want to receive that disability income. Now, when the disability, you start getting the disability income, do you want it 30 days after your disability, 60 days after your disability, 90 days, 6 months, or a year? 30 days, you want it right away. Now, the reason you have all these options is so that you can tailor-made a plan for your client. This client in particular has no disability, but no disability plan, but he's going to get a new job in 2 weeks. And he might get disability from his job. So we're going to wait 2 weeks to see what plan he has available at his job. Let's assume he gets a 1-year a disability plan for 1 year. Then if he gets a plan from his job that he becomes disabled, he will receive an income for 1 year. Then we will take this plan with a 365 days waiting period, so that when the job stop pays, this plan picks up and continues. And he can receive it for whatever term he's going to choose. Now, you can choose 2 years, 5 years, or 10 years. What that does, and again, it's what the client wants. If he becomes disabled, now his family have to decide, what do we do? They can choose a plan that will give them time to make adjustment in their financial situation. Whether it's 2 years to say, listen, we can receive income for 2 years, that will be sufficient for us to readjust our situation and move down to a smaller expense situation or whatever. He can choose 1 to 10 years. The premium differs if you're going to receive in 30 days, and one is going to receive disability income in 6 months. Since he's going to wait longer for that income, his premium will be cheaper. If you're going to receive income for 2 years, and he's going to receive for 10 years, his premium is going to be higher. So again, based on the budget and what the client wants, you can tailor-made the plan for the disability. And again, the client is the one tailor-made this, not you, based on what they want for their family and itself. This is an individual, a specific plan for that client. Another one is doctors. I mean, what classifies you as disability, as being disabled? A lot of people think that Social Security will pay you. Social Security disability. Mind you, there's a waiting period of 1 year, 365 days, before you can apply for Social Security in New York. If you depend on just that, by the time you get to that point, you might lose your home. Okay. So there is Social Security disability. There is workers' compensation, which a lot of people talk about, but that's only if an injury happens at the job. But if you're making $5,000 a month, are you going to live on $800 or $600 from workers' compensation? And again, what if the injury happens out of the job? So these are objections or questions the client might say, oh, there's workers' compensation or there's Social Security disability. You have to have a little knowledge to tell them when those things will come into play. Disability is, the definition is if you're unable to perform the job that you are doing now. That's what disability is. If you're unable to perform the job that you're doing now. However, you have owner occupation disability. Someone could take out a policy that if they're disabled and they cannot get a job back in their occupation, they can be okay in 12 months or 2 years and they can go get a guard job. They're okay, they're not disabled anymore. But if they have a policy that says owner occupation, the occupation that you were doing, and that applies more to professional, like a doctor, a surgeon, for example. If 2 of his fingers are, cut or injured, he's disabled. He can do another job, but if he has a policy that says owner occupation, then he can never become a surgeon again if just 2 fingers are cut off or whatnot. So those are the 2 definitions that you want when you present a policy to a client. A straight disability or owner occupation. Let's be careful again with compliance that if somebody has a disability plan and they're paying $200 a month, we don't go back with one and say, hey, I can get you one for $110 a month. What you might have done there was to take them from a policy that has owner occupation and give them just a regular disability. It's not just premium. Okay? You have to do the right thing. Different occupation, and you have different policies. The professional is the one that you have to be very specific with disability. That you have to be careful as to the classification that you give them, the owner occupation. There is a lifetime, there's one that's called non-cancelable. Disability is like term insurance. It can be done in 5 years, or it can be non-cancelable. Insurance company could change their whole category of a portfolio and says, we're not going to carry this policy anymore, this type of policy. If you have a policy that's non-cancelable, the insurance company can never cancel that policy. So the best of the best is an owner occupation, non-cancelable policy. And then you can scale it up. Obviously that's the most expensive, that's the best policy. And as you go down, then it comes down. Once you educate your clients and you're in compliance, you educate them, they know what they're buying, then you're okay. Any questions?
Yes, I got a question. If somebody takes 6 universal with living benefits, it's not covered your disability, which do you talk about?
Let's don't mix up disability waiver for disability income. Disability waiver under life insurance policy says that if you become disabled, it means you're unable to perform your job for 6 months. Disability waiver will come into play where the insurance company will pay the premiums. And in the universal life, they will pay, you have a choice, they will pay the cost of the insurance.
I think
So-
what he meant is there's a chronic illness rider.
Yeah.
Which illness rider?
Chronic illness rider.
Chronic illness. That's different. That's chronic illness, right?
Yeah.
Now, if you fall down and break an arm, that's not chronic, but you're unable to go to work. Chronic illness is different. Just like how you have terminal illness under life insurance. Terminal means you will die within, the doctor has diagnosed that death will occur within 12 months. That's terminal illness. So they were paid a percentage of the life insurance benefit. Chronic illness is a chronic illness, not if you break a leg and you're unable to work for a year. So disability, be careful with disability waiver, which means it will pay the premium, so at least your life insurance is being paid. And it's important, guys. I always run disability waiver on my life insurance. Okay? Here what you do. You run the illustration with disability waiver, and on the second page it shows you the cost of disability waiver. $364 for the whole year, for example. So you tell your client, you have disability waiver here that says if you become disabled and you're unable to work after 6 months, the company will pay your premium until you return back to work. Once you explain that to the client and they understand what disability waiver is, then they can decide if they want it or they don't want it. And you can always strike it off. $364 a year, what they say, $30 a month, Yuri?
Yeah.
So let them make the decision, but quote it. Rather than don't quote it, and later on something happened, the agent said, what happened? He didn't give you disability waiver? Oh, he never mentioned anything. Let the client decide what they want. Give them all the options. Also, I like to give them option A and B, and let's go back to index UL. Give them the option between, when you sell the index UL, option A and option B. Option A, the death benefit stays the same all the time, right? Right?
Yeah.
Okay.
Yes.
If it's 500,000 life insurance, in 5 years, 10 years, 20 years, 30 years, it's still 500,000. And the cash value could be 150,000. At death, the insured beneficiary gets 500,000. The life insurance company keeps the cash value of 126,000. Run the other illustration with option B and show them that the 500,000 life insurance increases every year. So in the 20 years, the life insurance is 500,000 plus 126. The death benefit is 626,000 to the beneficiary. They get the 500,000 plus the cash value. It doesn't cost much more, but give them the option, let them decide. Because then if you don't, you're opening the door to the competition. Back to disability. One of the easiest sale of disability is, or one of the most prevalent need is, someone will say, okay, I want the mortgage to be paid if I become sick, because the mortgage is priority. That's the main thing. And with two income family, they can make do with the income from the other partner. So at least you can, from an approach, from a need basis, do a disability policy that would cover, let's say, $2,200 a month to pay the mortgage. You can address it that way. Disability would base on the income. You always ask for a W-2. Okay? If they want you to find out, say, let me have a look at your W-2, because that's what the underwriter would need to see what you qualify for. If you're self-employed, we ask for the tax return. Right? Not how much he makes. Because then you'll be spinning your wheel. He's going to say, I make $150,000, which he does, but after accounting all those things, he made $42,000. He would have wasted a month, wasted underwriting time, waste your time, waste my time, whereas I could have helped him to sell a policy. Let's be more efficient. We're here at the academy to learn how to do things better.
Hey, Chris, let's say you're a husband and wife. One is W-2 income and one is 1099. Can you do a disability coverage with both of them attached to it? Only have to be with
It's
the
based
W-2.
on income. It's the ability to replace lost income.
No, it has to be individual.
Combined
You can't-
policies.
Huh?
Not of my knowledge. No. Why would you want to combine policy?
Because if something should happen to one.
If something happens to one, because those are two different scenarios and two different calculations. One is the W-2 of 90,000, and this one is a 1099. That's what the net income is. It's different. I don't know of any individual line for both of them.
So the elevator inspector, but he found a job of a different vocation that makes similar or more money. Will he be still paid for his disability?
Disability, that's a good question. Very good.
What was the question again?
If the elevator inspector has this policy,
Yeah,
and he found a job that gives him a similar policy,
right.
right? Now he has two. Well, he has to make a choice if he wants to continue to keep this or the one
Which
here.
one? Yeah.
Because if he has this forever, let's assume, right? And what if he loses the job or he leaves the job later? So it's a decision he has to make. However, what's important, disability income is here to replace your income, okay, what you have lost, a percentage of it. So if he has two policies at the same time, don't think that he'll be collecting from two companies.
No,
No,
the
no,
question is if he was collecting disability income and found a job, now it stops. It does stop.
I think you answered that question after you asked.
Even though it's owner, like you said, that it was specifically for that job that he had at the time. He was a constructor. So he gets disability as a constructor and he found a job as a cook.
Well, that's a good question too, because if he has an owner occupation policy and he finds a job as a cook, but he's not in a condition to go do back this job, he can still receive it.
So this was his question.
Yeah.
Chris, Dan wanted to come up and unleash something actually in the disability side.
Great.
I think it'd be great timing for us to.
Perfect. Come on up
We're
there.
so on the cutting edge here, it's not even funny. Give him a big hand.